Hey everyone, Dalton Grados here with Grados Capital, here for our weekly newsletter for this week of July 22nd, looking at the markets. Today is Monday evening, so we've already had Monday's day of trading, and we're looking at the week ahead going into the markets. First of all, we have a lot going on politically, and so I'll just address that as far as it relates to the markets, with the news of Biden pulling out of the race. Of course, the Trump assassination attempt and him gaining popularity, and then couple that on top of the big news this past weekend, Biden pulling out. Here is pretty much the gist as far as it relates to markets, is that it really doesn't matter that much. I know people want to believe that it matters, but the data shows that markets act pretty much irrespective of who is leading the government. Whether it's Republican or Democrat. In fact, I could have pulled some charts up here. I'd have to dig through them now to pull them up, but basically showing like if you had invested in the market only when a Republican was president or only when a Democrat was president, the returns were so minuscule in comparison to if you had just stayed invested in the market regardless of who was president. So, there's a lot of other factors, and mainly the factors that we look at every week and we've been looking at with regards to the Fed, the interest rates, and the economic data as it relates to unemployment, inflation, the jobs numbers, all of those economic indicators are telling us not only what we need to know about the economy, but are helping investors to predict what the Fed ultimately will do, because they know that the Fed is looking at these economic indicators as well. And so that's really what's driving the markets. Of course, on a individual stock basis, you have fundamentals of the company, and things like earnings and everything like that will affect individual stocks. So I'm referencing the market indexes when I'm talking about the market. The ES futures here, what we typically trade. We also trade the NQ futures, and we'll look at that as well. But yeah, so that's basically the gist as far as all this political stuff. Just data shows it doesn't really, it shouldn't really affect your outlook on the market that much. Now I will say that the markets are pricing in a Biden a Trump win at this point. So that's what the markets are pricing in. If you look at just the stability of the market, and also with the big money typically goes to who they think will win. So you see Trump getting a lot of support from ultra-rich billionaire donors at this time. Of course, things could change. A lot of things have changed over the past few weeks. We had major historical events happen back to back, so things could change. But right now, markets are pricing in, or are more leaning towards, feel that it is more probable that Trump will win in the election coming up. And so that's sort of where we're currently at. I was on a call with a BlackRock guy a couple weeks ago, and that's what he was saying. BlackRock is pretty much believes at this point in time it's more probable that Trump will win. So anyway, let's look at these markets here. So starting with the weekly chart, we've had a bit of a pullback in the ES, but still holding pretty stable. But we have this sort of engulfing candle, and if we look at the NQs, a little bit weaker. So one thing we were talking about in last week's newsletter was that the NQs are showing a little bit more weakness than the ES, especially if we bring it down to a daily chart. We're seeing quite a bit of heavy selling in the NQs and a little bit of balance right now, but sort of a little bit of a struggle, at least currently, to recover this. This is pretty much negating some of the past run that we've had. Now, the reason that that's important is because when we look at the ES, we see a little bit more stability, right? We see these levels holding here, like the 5550s, 5600s are holding in the ES. But what's been leading the ES is the NQ, right? Those big tech names. So if we're seeing a pullback in the NQ, then that could mean that there's further weakness to be had in the markets, right? Now let's look at our fundamentals going into the week ahead, what we have to look forward to, right? So let's see. Okay, so Tuesday, not much. Wednesday, okay, we have some manufacturing PMI, so that'll be interesting to look at. And what we want to see is yeah, I mean the manufacturing PMI is not as important as inflation and everything like that. So anyway, regular unemployment claims Thursday. We don't have anything. We don't have any major Fed speakers Wednesday. So overall, pretty quiet week as far as news. I believe there is some earnings coming up this week, but I don't think there's any. I don't think there's any of the big tech earnings. Let me see if I can find that, just to be sure. All right. Okay. Yeah, I don't think we have any big tech earnings. Sometimes that can move I stand corrected. We have, so tomorrow evening we have Alphabet, we have Tesla, so tomorrow could be a volatile day regarding that. Alphabet and Tesla could really move the markets, especially Alphabet. Don't forget, it's got the same market cap as, pretty much the same market cap as Apple, Microsoft, and Nvidia. So those companies are really the biggest in the market. Not seeing any there. So that would be one to watch out for tomorrow. And let me just go through Thursdays and just to see if there's anything else standing out. Okay, and if you're watching this, you can watch this at a faster speed as we go through this. Okay, so yeah, that's the main one, is tomorrow night. So so basically, we're kind of in a little bit of a pullback. So what I'm looking for is really the NQs, to see how the NQs are going to lead the market now, especially with the earnings that we have coming up tomorrow. Could be interesting, right? So we want to be looking for the NQs 20,000 is going to be a big level right here. So if I mark roughly 20,000 level, kind of long or short, above and below. And then definitely below these lows that we made. So if you see in the NQs, which we didn't have in the ES, if I go back, this is what I talk about by relative weakness and leading the market. So you see the ES, we sort of bounced right at these levels, right? Which it did not come below this shelf here, right, in the ES. The NQ did. So we're showing that the NQ, that's what I'm getting at when I'm saying, see how we came down here? We came below this support level, this shelf here. So what would be really interesting to see to the downside is if we break that low. And that, breaking that low, could continue another leg down. really targeting around the 19,000 level. Right? Doesn't have to be exact. There's a lot of points on the NQ. So 84, 19,000, same thing. So that will be very interesting because we have violated these lows here. It'd be very interesting to see if this NQ pulls the market down. So I'd be paying attention to the weakness in an NQ for a guide as far as if the ES will come down. Now, again, things with earnings and just with market sentiment in general, this could be also a buyable pullback, if we continue back up. And if we continue back up, I'd really be looking for this shelf. So again, this right here on your daily chart is your fair value gap, right? This gap in this big bearish candle here. We could fill this gap and continue balancing to downward, but if we can break above this gap and above this blanking order block here, then that could be a continued leg higher for the new highs, right? So that's what I'd be looking for on a technical level. And again, the political stuff, try not to let it get in the way of your market outlook that much. It doesn't matter that much. And I think that's pretty much all I had going into this week. So again, pretty neutral. Could go either way, really. So, but these are the levels that we're going to be looking for. Overall, economic data would show us, at least the economic data we've had recently, would show us that things can be pretty bullish. It doesn't mean the market will do that, but this could potentially be a viable pullback unless we get some shocking economic data, because right now the economic data is looking good, and it's showing that the Fed can go ahead and likely cut rates by the end of the year. It should be super bullish for the markets. Don't forget, as the Fed cuts rates, not only is that good for these more of these tech and growth companies, because the cost of borrowing is cheaper, but also you have people that are earning a good yield right now in safe investments, and those yields, those interest rates will be going down if they cut rates. So investors will have to move their money from fixed investments, safe investments, into the stock market. And so that's why those rate cuts will really drive this thing higher. So I think that's about it. It's, as you can see, kind of late in the evening. Oh, you can't see my clock, actually. It's about 9:30 in the evening. So I'm going to finish this up, but hope you guys enjoy it. And, draw these levels. Be looking for these levels in your charts, since it's a pretty light week for data. Be looking more at the technical levels. All right, see you guys next week.